All right, today I'm super excited to talk to you all about the performance of Barbara Corcoran on Shark Tank. So if you followed my channel, you probably saw my video on Mark Cuban where I did a full breakdown on all of his investments, his performance, et cetera, et cetera. And lo and behold, he's actually a much better investor than I thought, and in fact, even he thought, given some comments he's made on other channels. So, because of that, I thought it'd be fun to dive in and evaluate all the rest of the sharks and really look at them as though I were a potential investor in their fund and them as an investor. So today, we're going to talk about Barbara Corcoran. You know, famously, she's the I'm out. But shockingly, she's actually made more investments than some of the other sharks. Despite always saying I'm out for all kinds of crazy reasons, she actually has more investments than Kevin O'Leary, Mr. Wonderful, which I thought was a huge surprise because he's one of the most vocal, always angling for a deal out there. But he actually, of all the 5 sharks, has done the fewest number of deals. All right, let's dive into some quick stats about Barbara. So first of all, she's made about 53 investments, 29 of which are still in business, and a whopping 24 have gone out of business. So she's got, call it like a 55% hit rate of keeping these things alive, which in comparison to the other sharks is actually not so bad. To date, she's had 3 exits, and an exit, when I talk about an exit, what I mean by that in kind of the venture industry is a time when you're able to exit your investment, sell your shares, and get a return. Now, there are 3 types of exits. You could have your business acquired, which is pretty much what happens with all the sharks. I don't think I've seen a single deal where the company's gone public yet. That Damon may get lucky and have one go public. We'll talk about that in another video, so be sure to check out that one. So you could go public, your company could get acquired, or you could go bankrupt and basically lose everything or get pennies on the dollar when somebody comes in and buys the assets for very little. In this context, when I say exits, I'm talking about a positive return because the company was acquired for enough money that I believe, either based on evidence that I have or other information, that the shark has actually generated a bit of a return. So let's talk about her top investments. Now, the interesting thing about Barbara is that her investments follow very closely the power law distribution. Now, in venture capital, if you watch my other videos, I talk about this idea of power law, and that is that the returns are very, very skewed. So, one company or one investment generates massive returns, and then the next one generates really good returns, and the next one okay returns, and then the next one even less and less and less and less. Now, rationally, we would want to think that returns to investments would follow like a bell curve, right? You got like ones in the middle, like on average, all the investments return like, 3 times your investment or something. And then you have a few on one side that generate like a huge return and few on the other side that just go out of business. But power law and the reality in venture capital is that it's way more skewed. So you'll have a couple of businesses that do really well, and then you basically lose money on all the rest. So the fact that she's got like this 55% hit rate of keeping businesses alive is really actually pretty good. TBD if the remaining 55% of her investments will, stick around and survive, because, life is life. Things go up, things go down. But nonetheless, that's actually pretty good to have that kind of survivability, especially the types of businesses she's investing in, the stage at which she's investing in. And then she definitely has some outliers. So let's talk about some of her outliers. So her number 1 best deal is Cousins Maine Lobster. And in that investment, she gave the company $55,000 in exchange for 15% of the business. Now, not accounting for dilution, today, that investment is worth a whopping $13 million. Or in other words, she's made over 200 times her original investment. Now, that investment right there is going to cover all of her other losses. That other 45% of her investments, gone, zero. In fact, it covers it by a multiple of like 6 or 7x. So right there, like, she's doing just fine. Her next closest investment, and as you'll see, this follows like that power law, right? generated a really good return, but instead of 200x, it's generating, I think, about 50x based on my estimations. That's the company Grace and Lace. They do clothing for women. That was an $87,000 investment that's now worth roughly $4.5 million. And then the last investment is a company called Tom and Chi, which was this like Korean grilled cheese sandwich company. And I think represents one of her 3 exits. And based on my estimations, and I could be wrong on my numbers here, but just kind of scouring the web and everything I could find, I'm guessing she generated about a 5x return on that investment. Now, that was an investment that's kind of interesting because the company was growing really fast and kind of got over its skis and then was struggling and then ended up getting acquired. I think it kind of got acquired at a fire sale, but the reason why, she still generated a pretty good return of like 5-ish X, I think, is largely because her original investment was at such a low valuation. I mean, she basically invested $300,000 for 15% of the business, which valued the company at $1.4 million. So, at the time it sold, it had a number of locations, it had real revenue, a lot of those things. And so in my mind, there's a pretty good chance that it got acquired for something north of 1.4. In fact, I estimated somewhere in the like sub $10 million range, which is how you get to that roughly 5x return. All of that said, if you look at the rest of her portfolio, if you will, I could only really find like 3 other companies that had gone up in valuation. So if you look at her portfolio, she's made 53 investments. 24 of those have gone out of business. 6 have gone up in value. And that leaves about 23 that are just kind of sitting there at their prior valuation at which she invested. And I just kind of gave her the benefit of the doubt that the valuation, hasn't changed much since she invested. Now, in some light, that could be really conservative because some of these businesses could be doing really well, right? They got that Shark Tank bump and they just continue to ride it, but there's just not a lot of information out there about them. But more often than not, it's probably the reverse, that these companies are really struggling and, maybe on their deathbed. So, I thought just keeping the valuation flat is probably a reasonable assumption to make when calculating her returns. And really is in line, frankly, with how most venture funds value their investments. They value them based on the last round or the last time that the company received a valuation. Usually that happens when another investor comes in and makes an investment in the company and sets a valuation on the company. So that, that's pretty typical. Not all venture funds will operate that way. Some will try to run discounted cash flow analyses, comps analyses, and others to try to get to a valuation that's a little more up to date. But marking to last round, as we call it, is actually a pretty common practice. Just some other interesting things about Barbara's investment strategy. So she likes to co-invest with her peers quite a bit. So about 55%, a little more than half of her investments she does with at least one other person, oftentimes with several other investors. Her average investment size is around $85,000. Her median is around $75,000. And what that means is basically like on average, she invests 85, but there's a few outliers, probably those where she's invested like $300,000 that pull her up when the reality is kind of the median is 75. So I would expect, $75K to be what you should expect as an entrepreneur going on Shark Tank to get from Barbara. Don't mind me as I look down and read my notes. I've got a lot of data points here and, it's hard to keep them all in my brain. Some other interesting things about Barbara is her largest investment is $350K. Her smallest investment is $12,500. So, pretty small investment on the low side. I think that might be the lowest. If not, it's as low as they get. And $350,000 on the high end is actually pretty low. So a lot of the other sharks have dipped their toes in the water of writing checks in the millions. But not Barbara. She is far more conservative, which, kind of aligns with her temperament on the show, where she's quick to find the risk and bow out when she doesn't feel comfortable with it. And when she does dip in, she writes a relatively smaller check than some of her peers. What does that mean? That means that on average, she's going to lose less money on any given deal. But it also, on the flip side, is going to hurt her because she's not going to be able to generate as huge of a cash-on-cash return as some of her peers that are writing bigger checks. Now, that said, if you look at her investment in Cousin's Maine Lobster, she wrote a $55,000 check there, which was quite a bit smaller than her typical check size of 75 and much smaller than her high. But nonetheless, that investment's done so well that it kind of doesn't matter that it was a relatively small check. She's going to make like $15 million on that investment alone, which is going to cover a lot of her other losses, even those that were at bigger check sizes. One of the things I really respect about Barbara, though, is that she is really disciplined about how much she invests, when she invests, how she invests. And I think that discipline has allowed her to create a fund, if you will, that's actually pretty interesting. So let's talk about Corcoran Capital, if you will, and how she would be evaluated by somebody that was looking at investing in her quote-unquote fund. So I'm going to throw out some terms that get used in the venture space, particularly when evaluating venture funds. Specifically, we're going to talk about NAV, we're going to talk about DPI, and we're going to talk about TVPI. Now, NAV is net asset value, and what that means is it's the value of her assets or her investments today. Minus any liabilities. Now, in this case, Barbara does, I'm assuming that Barbara hasn't borrowed any money to finance these investments. I could be wrong. She may have, in which case, her NAV might be slightly different than this. But for venture funds for the most part do not borrow money to make their investments. So I'm going to assume that she has zero debt, at least debt tied to these investments. So with that, you basically just take the total value of her investments today, and that gives you her NAV, which is $25.1 million. Now, the next metric that investors care about is what's called TVPI, or total value paid in. Now, that's kind of a convoluted term, but what it really means is for every dollar that I've paid in, what's the value of that dollar today? So Barbara's invested roughly $4.8 million. It's worth $25 million today, so her TVPI is about 5.4. Now, if you watch my other video with Mark Cuban, you'll know that that multiple on her investments is pretty good because that's about what his is as well. And I'll tell you, as a venture fund, and I mentioned this on his video too, a good 5x on your fund is really, really good. Most funds are shooting for between 3 and 5x. And if you're able to generate a 3 to 5x return on your investments, like your fund overall, then you've got a really, really high performing fund. Now, the top tier investors are shooting for closer to 10x their funds, but they represent kind of the upper echelon of venture investors. Then the top 1%. Most of the top performing funds, the top quartile or the top 25% are generating in that 3 to 5x range. And so Barbara is from a fund perspective, right there with some of the best investors. Just some other interesting stats. So she's lost about $2 million, which represents about 43% of her capital. Which, isn't bad. It's not the worst among the sharks. It's not the best either. Some of the other sharks, like Robert, actually are better on their loss ratios. And then the last metric I want to talk about is DPI, which is distributions paid in. And what that refers to is for every dollar that I've put in, how many dollars have I actually been paid back? So not like the paper value of my investments, but actually money in my pocket. Now, this one is a really hard one to get because I don't really have access to her financials and her bank account, right? So I can only estimate what it is. But based on my estimations, she's had 6 exits that have returned cash. I'm estimating in total those have returned about $1.7 million. So, 1.7 divided by 4.8, that gives you 3.7 DPI. Which means that for every dollar I put in to Corcoran Capital, she's paid back to me 37 cents. So, well, on the one hand, her TVPI, or her total gains, if you will, both real and paper, are really good, around 5.4. In reality, she's only returned, 37 cents on the dollar invested. That leads us to a discussion around, how real are her investments, right? How real are her returns of 5.4x? Because a lot of her investments are probably going to go out of business. Now, the flip side is if she hasn't exited or sold any of her stake in Cousins Maine Lobster, that thing could continue to grow and perform, and she could produce even better results. And in fact, some of her other investments may also continue to perform and do really well. And so, we'll have to see. I'm curious, this is one of my big questions with a lot of the sharks and the investments that they make. And that is, how do you get liquidity on these investments when it's a restaurant chain with 5 locations? Like, probably not going to go public, probably a limited sphere of potential acquirers, probably not generating a huge amount of profits that you can dividend out. And so a lot of the sharks run this risk of making an investment in a company that will never have a liquidity event other than bankruptcy eventually, especially if they just kind of plateau in terms of growth, in which case, you're an investor in this company like Barbara and you see them doing really, really well, but you're not really capturing any of those gains. And then, it was like a really trendy business and it grew really fast, or they got like that Shark Tank bump and generated a ton of profits. But you didn't get any of them because they reinvested them in the business. But it turned out that people, weren't really that excited about what they were doing, and they eventually went out of business. And so you have these like I said at the beginning, you have these like ups and downs of how businesses perform. And so things can be looking really good for Barbara and her investments on one day and horrible the next when the company actually ends up folding. Before I wrap this up and tell you who actually is the king of doing the least, let's talk about one of Barbara's biggest misses. So she invested in a company called Pink Shutter. Pink Shutter was this kind of fun, interesting photo booth concept. Company grew really fast, grew to about 10 locations, seemed to be doing really well, and then I think just got fully like sucker punched during COVID because nobody was going to their physical locations to take pictures. And then I think you combine that with, the smartphones just get better and better and better. And so the demand for these photo booths just kept going down and down and down. It was one of her largest checks, a $300,000 investment that I estimate today is probably worth about $100,000. But anyways, just kind of an interesting example of one of those instances where, just like I talked about, you're on the top of the world one day and then something, comes out of nowhere and blindsides you and basically puts the business under the next. So as I said at the beginning, Barbara's done about 53 investments, which actually puts her up there pretty high in terms of the total number of investments that she's done. The person that's done the least, brace yourselves, is Mr. Wonderful himself with only 39 investments. So, I have a whole other episode coming out all about him that you'll have to watch, where I dive in deep to his portfolio and some of my thoughts onto why, at the end of the day, despite being one of the most vocal and outspoken of the sharks, he ends up doing the least. I think, honestly, it's probably because he fights for a lot of deals, but I think he loses a lot of deals. And you can probably guess why that is the case. Anyways, I hope this was enjoyable, that you learned something through the process. What do you think of Barbara's investment track record? Would you want to invest in Corcoran Capital? I think it would be pretty tempting myself. And if you haven't seen my Mark Cuban video where I do the same breakdown, you got to check it out because I think you'll find it to be pretty eye-opening. I sure did.